please read. Even in our office also we have practice of reading the concept paper, reading the preamble to the circular, and understand what is the object of the regulator before we go to a notification. One important part here which I would like to draw to your notice here is that even in the case of loan against debts, the regulation below 500 crores has not notified that there will be a FPC or a KYC norms applicable. If you see November 10th guidelines, there were two types of regulations. If you are in a loaning business, okay, then the KYC or code of conduct of business will be applicable. If you are not in a customer interface, then light regulations will be applicable. Now the question here is, in the notification, though there is a definition of code of conduct of business in the new notification. However, if I am below 500 crores and giving loans onward to somebody, whether KYC norms, money laundering, PMLA norms, all these norms will be applicable or not, then I think we have to again see the circular which in my mind it has to follow, because the definition is there, but there is no mention about that. But to my mind, if you read November 10, it is very clear that if you are having a customer interface, even out of your own money you are lending, then KYC norms will be applicable to you. Other important thing, there were so many queries which were coming to us that whether this 50% has to be seen at a script level or at a portfolio level. Okay, I think there is some clarification which is there, which says that one you have to see on a portfolio level and not at a script level. So if some script is below 50%, some script is above 50%, you have to take the total and then you can apply. Other question which I think so many questions went to RBI, sorry, we have already given the loan. Now can we go back and do this 50% because I have given 75% loan of the value. Now you are asking only 50% of the loan to value. What will be done to the already existing account? And I think lots of queries have been put to Reserve Bank of India. I think one of the clarifications which is that if is already existing loan, you may continue till the time of renewal. For the new loan, this will be applied. Now, question were coming that when the renewal is due, all that one will have to debate, because if you have an omnibus, open-ended loan and is never going to be renewed, all that is a subject matter of discussion. But the clarification says that if there is a loan already existing and sanctioned prior to this 21st August circular, then you may continue till the time it is over. Next important thing is, I just touch upon because I know that you have auditing and accounting part separate post lunch. On NPA friends, there is a big change. The NPA earlier were from 6 months, that is 180 days, if you have not received interest or principal. Okay, and then 18 months for substandard and 18 months for doubtful. Now, these NPA limits to make it akin to bank has been made from 6/18/18 to almost 3/12/12. Okay, so going forward, what will happen if, I'll just give you one example, if some interest or principal was due on 1st June 2015, as per the original definitions, earlier one, it will become doubtful on 31st December 2018. Okay, so you had 42 months to make that amount doubtful. With new definition, if today on 1st June 2015, if the interest or principal is due, it will become doubtful on 30th September 2017. So what will happen? From 42 months, your NPA has been preponed to 27 months. So what otherwise was going to impact your balance sheet in 42nd month, now that is going to impact your balance sheet on 27 months. So one will have to plan their affairs accordingly for a future. That okay, what NPA was today, we suddenly will show and have a balance sheet or have an impact on your profitability. So this one will have to take in the mind. Only one good thing is this change is only for SI above 500 crores. So below 500 crores company, they will still govern by the old regulations, they will not be burdened by these new regulations. Another important thing which we have been talking here is a standard asset provision. Now, good thing is, even your asset has not become bad, then also Reserve Bank of India requires that you make a small provision of 0.25% as a standard asset provision. Now this 0.25 has retained 0.25 for non-SI, but the 0.25 will go to 0.40% over a period of 2-3 years in the SI. So you have to understand that now the provision is not only for a non-performing asset, but provision is also required for the good asset, standard asset also. Other important thing, friend, is SMA. Now this SMA also was the top of the counter. Okay, what is this SMA? This SMA was special mention account. So what RBI felt, and rightly so, that if don't wait for your thing to become NPA on 180 days, you have to identify early NPA or find what are the potential NPA. So I think the last, in March 2014, the circular came up, that concept of SMA, that if there is an incipient stress or if you feel there is a potential NPA which is less than 30 days, today you found that interest has not become due or interest already become due, don't wait for 180 days to make it NPA. What you can do, if it is between 0 to 30 days and you feel that the money may not be received, it is SMA 0. If you feel that in this same SMA, this special mention account, will be categorized between 31 to 60 years as SMA 1. So the whole purpose of this is to identify early NPA. Okay, don't wait for 180 days. And for that, you go and report to Reserve Bank of India. Questions have been coming that when we go for audit, you have shown NPA at 180 days, but there is no SMA reporting. So one will have to be very clear that the NPA provisioning should, only post SMA reporting. Otherwise, many times what happens, SMA reporting has not been done and suddenly you find NPA. And when we question that, okay, why this has happened? Oh, that was we were not knowing. So, one will have to understand, now this SMA was for only SI, that is above 100 crores. Now, this circular we don't know today, that this will move to a company who are having more than 500 crores SSI or it will still remain at 100 crores. But to my mind, it should still remain at 100 crores because the potential NPA is much more important concept as far as small NBFCs are concerned rather than the larger NBFCs. Other important thing is, if you see the new notification, the guidelines has come, friends, on a restructured advance. Oh, so whenever on Sunday when nobody is at home, okay, please read the restructured advance. Okay, we try to read at different times. My office try to read, but it's a bit complicated, but it's more of a project, very important, because many of the NBFCs were evergreening the account. So they were trying to, avoid that NPA and try to do restructure and all more. So I think the very detailed guidelines has now come that what will be known as restructured advance. And if it is known as restructured advance, then the new restructured NPA norms will follow. Okay? So supposing on 170th day, you decided to do something with the NPA and you make it good. Okay? So that NPA will not become a standard asset. You will have to see the definition of restructured advance and accordingly you have to apply the norms. We'll take 5 minutes and then we'll take questions. Friends, I think the next important change is corporate governance or fair practice code. Now this very important is RBI is now, there are two concepts. Conduct of business. Okay, the fair practice code will now move to conduct of business and corporate governance. Now earlier in May 2007, there was circular that any company who are having more than 50 crore asset will have to constitute an audit committee. Okay, they have to constitute a nomination committee, risk management committee. Now, on April 10, 2015, the notification has come, that is last week. So as I told you, in last 15 days, we were being very active reading every day, so when seeing the site. On April 10, notification received that it will applicable only to SI. So if you are a systemic investment company, a systemic important company which is more than 500 crores, then the question will come up that you have to have nomination committee, audit committee, and risk management committee. Now the question came up that if the risk management committee should be done, what has to be done with the ALCO, the asset liability management committee. Okay, whether it has gone for below 500 crores, I think there is no still clarity on that. To my mind, it has to remain because companies which are below 500 crores, they are required to manage their asset very well. So earlier, if you see May 2007 circular also, they have said the company will have to constitute a risk management committee in addition to ALCO, asset liability committee. Okay, so they have always been talking about two committees, but today we have not found any clarity on this, that ALCO is only now applicable to above 500 or it will applicable between 100 to 500. But to my mind, still the clarity is there. You please go on filing the necessary returns to Reserve Bank of India, and otherwise also is a good concept of doing the analysis of your future cash flow. Now in new corporate governance guideline, friends, the disclosure norms has gone for 12 pages. So if you really go and count pages, there are 12 pages you have to disclose. So it is more akin with the listed company norms. And even in director reports, you have to do management and discussion analysis, which you find in the listed company. So if you are above 500 crores, please read this circular, which is notification, which is on a corporate governance. A fair practice code, friends, there are lots of query, but I am not discussing because many of they say that the KYC which you prepare or agreement is should be in a vernacular language, or language is understood by the borrower, or communication should be in vernacular language. The fair practice code should be put on your website. The interest rate, you cannot charge excessive interest, all that. And one more thing is, as per the new, if you are a SI company, you have to formulate the policy which is known as corporate governance policy. I can see many of your faces, either you are tired or when you are seeing a Mumbai match where Mumbai is lost with 50 runs, But friends, wait, okay, this is not what I am speaking. RBI regulations is tough. So many of you are just been, I can see so many faces, either they are blind. So as if I am talking some German or French language, only the act is good, the speech we don't understand. Anyway friends, we will just end up and take your questions, which I am sure you are more interested, and we can take benefit of Mr. Swami here. Last and very important is a change of control. Friends, many of you are running here and there to buy NBFC or to sell NBFCs or to do some change of control. Earlier, for a smaller or a non-deposit taking NBFCs, prior approval was not required. From the last year, the 21st May 2014, prior approval is required. Now that circular was a bit confusing, that when I have to approach RBI, if I am doing merger amalgamations, or if I am doing some takeover, with pure buying or selling of shares, when we have to approach, so there were lots of confusions were there. After taking all presentations or all public comments, on March 30th again, this, as I told you, last 15 days again was very active. March 30th, 2015, new draft direction has come, so any of your comment you can give. Mine, so that also I think we have to discuss in detail the draft. But here one point which I would like to draw your attention, if there is a change in directors which is more than 30% of the board of directors, then also prior permission required. So out of 3 directors, 1 is going, then also. So how really you will have to, word this and how really it is going to happen, we will have to see. But first time, change of directors prior permission has come in with a change of management here. In earlier circular, there was a mention about change of capital, paid up capital. Now this circular should take change of equity paid up capital. So lots of things one will have to read in between the line and understand when you approach RBI. But normally I always say to clients, in doubt disclose. So if you are in doubt that whether I have to approach RBI, it's better you go and write to RBI. In our view, we are changing this, whether cover or not cover, let them decide. So don't, as I told you, be too many skillful when you are interpreting the Reserve Bank of India regulations. Last important is, on again April 10, 2015, okay, which are whatever friend I am discussing is a development of last 15 years only. So bear with it. Okay. The one guidelines has come, code of conduct in outsourcing financial services. Now this is very, very, different. SEBI has these guidelines that any NBFCs who are outsourcing their activities to somebody else, they will have to follow some outsourcing norms. Now many times KYC, application processing, loan management, loan control, whether loan account doing good or bad, back office controls is been outsourced to somebody. So this is where it says that what is to be done. Outsourcing policy has to be done, outsourcing agreement has to be prepared. Even when you are doing a sales brochure or you are doing some sales note or pitch, you have to mention that this activity is going to be outsourced. And one thing is, you cannot outsource to the company where employee or directors are the owners. Okay, so one you have to be very careful. You can give to your group company, but when your employee or directors are owner of those companies, you may not outsource your activity, core activities. And last, which has been still lots of debate is definitely going to happen, is about internal audit functions cannot be outsourced. Now, to my surprise, which is of course lots of debate may be required, this still is a draft paper and we have to comment on that. But do we think that the smaller company, because this is applicable to all NBFCs, the smaller NBFCs which cannot have the internal auditor in the department, they will have to outsource. One will have to go to RBI and find out whether, I don't think there was an intent, but if the internal auditors cannot be outsourced, the smaller NBFC with 4 or 5 persons, how really they will function without supervision. So one will have to read it and understand the object of this. And friend, I think there are also some small changes, but which you may do some homework at your own. Okay. With this, I think we are here for your questions. One thing I want to tell you, this all NBFC guidelines and NBFC's law has been developed via various circular, press notes, notifications, slowly develops. Okay, so one will have to read. You cannot afford to miss, because it's not like budget to budget every year comes, read once and you are through. You have to go on reading and interpret. As I told you that the intention of the regulator is not to kill the entrepreneurship of the small entrepreneurs. So NBFC are going to remain in the field because now it is very clear by the act of the regulators. They are going to grow and they are going to flourish. So duty of all of us, either from the industry or from the profession, to see that we are on the right side of the law. When there is a confusion, approach the regulators and find out what is the correct answer. To my view, friends, before I start question and answers, in NBFC field, sunrise has just begun. So all the best to you and thank you so much for patient hearing. Thank you.
Thank you, Ramesh bhai, for taking us on the details of this recent development in the last fortnight. So we have received many queries and most of those queries are pondering on the how to calculate the financial asset. And the limit of 50% is to be calculated is the major issue. Whether I am a FI, I already registered some account with the RBI, should I again because registered under NBFC norms? The new startup business is there and share capital has been just issued and now invested money is a fixed deposit of the bank. Whether that will NBFC norms will apply because my 50% criteria is already met on this because my assets as well as the income is more. I invested in the mutual funds and the which are not trading mutual funds, whether that will be under within the meaning of the investments also. These are broad lines on which the queries are in the first stretch. We will take others at the.
I think queries are more than number of participants.
Regarding the financial assets, now I have made this presentation. The loans and advances, investments. Basically, these are the two things. Except these three items, that is loans and advances. Loans and advances where you will be earning. And the investments. Investments by your securities, by your government security, shares, debentures, mutual funds. These will be considered. And the third item is loans and advances, high purchase and leasing. These three components to calculate fixed deposits are exempted. Deposits in banks do not constitute financial assets. It's only the loans and advances, your investments, and your high purchase and lease assets. These three components will constitute your financial assets. In case the total of these three assets, three components, constitute more than 50% of your gross balance sheet size, then it can be said that it is complying with one component, that is asset pattern. Coming back to the income pattern, if you derive more than 50% of your gross income from these three items which I have said, then you are complying with the other component also. So asset and income pattern both are complied with, then you automatically fall into an NBFC. In which case you have to approach the Reserve Bank for taking the certificate of discharge. Fixed deposit, mutual fund also will be taken as an investment. Mutual fund. Only bank fixed deposits or bank current balances, they are exempted from the financial assets.
Other query is on the line spec. I am a partnership firm doing the business in the shares infrastructure. And should I require register as an LLP, whether I can do a business in NBFC?
See, regarding LLPs is concerned, of course, partnership firms they do not come for registration with the bank. As I said in my presentation, an entity should be registered under the Companies Act of 2013 or 1956 to be eligible for approaching the Reserve Bank of India in case it is intending to conduct the NBFC business. But partnership firms, they need not come to the Reserve Bank in case they are conducting the NBFC business, including loans and advances are related, provided they do not have public funds. Public fund means public deposits for partnership firms is concerned. But regarding LLPs is concerned, it is still a grey area in the sense they don't come to the Reserve Bank of India for registration. Obviously, because we are not entitled to deal with it because these companies are not registered, these entities are not registered with the Companies Act. They are registered for the LLP Act, Limited Liability Partnership Act. So, in fact, we have taken up with the ministry that they may not be allowed to undertake the NBFC business because according to the Reserve Bank regulation, no financial space should remain unregulated. No financial space should remain unregulated. If it remains unregulated, what happens in West may happen in India also. So that is why we don't want such segment should go unregulated. See, the objective of the LLP is to undertake your solicitor services. You basically professionals, solicitors, auditors, construction, architects. These are the various services which the LLPs are expected to undertake. But right now we have not, because since we deal with only corporate bodies, usually those which are registered with ROC under Companies Act 1956 or 2013, we are not dealing with them. But however, sometimes the ROC, an existing company, if it wants to convert into LLP, then ROC is advising such LLP companies to approach the Reserve Bank for endorsement. At the time, we are denying the endorsement. We are not giving the endorsement.
If the NBFC accepting deposits, not accepting deposits, and can it accept the NCDs from the foreign company, and whether the NCDs from the foreign company will form the part of public deposit?
See, any amount accepted from the foreign funders, foreign entities, they do not consider public deposit.
Whether the LTV ratio of 50% equal to maintain for IPO funding of NBFC? IPO funding, yes. LTV.
No, the lending funding.
Lending.
See, the lending, the IPO funding. This circle is we have brought out that 50% LTV is only for listed company. Once the listing is taking place, then automatically the rule will apply.
Can the companies belonging to same group can obtain the two different CUR for the two different companies belonging to same group?
Now, there is no prohibition. Normally, we are not encouraging. There are companies, there are groups which are having more than 5, 6, 10 bases in their group also. Historically, that has taken place. But as of now, unless there is a strong and genuine reason and necessity, we are not encouraging such companies. We are not encouraging because we want to see consolidation in the sector rather than the multiplicity or majoring of the entities.
Since the now requirement of minimum capital has been increased to crores and hence you will require to bring in some new shareholders or new directors in the company. So whether for that permission will be required?
There is no permission is required for bringing in enhancing the augmenting the capital. That is the business call you have to take, whether you want to bring in new shareholders or whether you can augment from the existing shareholders. The business call to be taken by the company themselves.
This is particular experience of the directors, whether there are only two directors of the company, whether the board need to have experience or
at least one of them should have. One of them should have it. One of them should have some NBFC experience to run the company on regulatory lines.
Enrollment of rating agency is compulsory for non-accepting deposit company?
No. The credit rating is only for the deposit taking companies, not for non-deposit.
Is there any restrictions on opening of the branch for non-accepting deposit company? Or they can...
No, see, NBFC dealing on only single units, say gold loan companies. In such companies, in case they want to expand more than 1,000, I mean, in case they want to expand the branches, beyond 1,000 branches, then they will have to approach the bank. Up to 1,000 branches, they need not approach.
That's one policy decision what they ask is whether the RBI is planning to protect the non-accepting deposit companies within the meaning of debt tribunals.
No, not debt tribunals. In fact, we are planning, we have recommended to the government of India to extend surface benefits, more than the tribunal, surface benefits to all the NBFCs. Most likely it will be best.
But is that said, this rating is required only for the deposit payment? Yes. But it's not taking deposit, it's not prevent.
See, our concern is there, in case debenture is fully secured, there is no need. There is no need for rating. You got a surface. Surface is for asset reconstruction companies. See, the Surface Act will enable the lenders to repossess the asset and dispose of without the intervention of the court. So that is a major advantage of Surface benefit. And there was a committee of the government of India, where Reserve Bank of India is also a member. They have made a recommendation that the Surface benefit should be extended to all the NBFCs also. So we have also recommended to the government of India. Government of India will have to amend the Surface Act, making all the NBFCs eligible under the Surface Act.
Why can't we go for the RBI is not making tribunals for our defaulters?
No, that's why the Surface Act is more powerful and more cost effective than the tribunal. In fact, tribunals have failed. All the debt recovery tribunals for the banks, no, they have failed. They have failed. That's why they have gone for Surface Act. So Surface, if you see newspaper every day, some bank or the other, they will be e-auctioning the loans, especially chronic loans, under the Surface Act.
Holding company is having the only activity of holding the investment in subsidiary company. Whether this will be falling under NBFC activity, it is no other business.
But they are also NBFC activity. Only thing is, in case they are doing only holding the investments or giving loans and advances to their own group companies, they will be treated as one class of companies, NBFC, but they will be treated as core investment companies. And in case they are not having any public fund, and in case their asset base is less than 100 crore rupees, I mean more than 100 rupees, there will be exempted CACs with there. There is exempted CACs. Even if some companies are having some public fund, but if their asset base is less than 100 crore rupees, then it will be exempted CAC. They will not come for registration with the bank. They can until they can intimate to RBI. Otherwise, even without intimation, they can function as a core investment company. But in case the companies are having public fund and their investment is more than 100 crore, if their asset base is more than 100 crore rupees, and they are investing in their group companies, and if they are lending granting loans and advances to group companies, then it will be a core investment company which is extremely important since they are having public fund. So in such case, they have to come to the Reserve Bank for registration. I think our friend, when he deals with his cases, he will be telling about it.
The companies which are currently having activity of say NBFC or they are holding shares but they are not registered. So what are the actions can be taken about those companies?
To this I should have covered in my presentation. Actually, we have got a very, I think here I can say that our auditor friends, they could not do their job portion properly because there is systemic, see in 2013, we have received a list of companies having financial code from the Ministry of Corporate Affairs. We have received more than 30,000 such companies in the country, whereas the companies registered with the Reserve Bank of India is 12,000 companies. So there is a gap of nearly 20,000 companies. Then we have studied the balance sheets of all such companies, going to the ROC office, downloading from their website all the balance sheets. Then we came to the conclusion that 6,000 companies in the country as a whole and 1,800 companies in Bombay jurisdiction alone are complying with your PBC criteria. We call it principal business criteria. We call it PBC criteria. In which way all the 1,800 companies should have approached the Reserve Bank of India and obtained the certificate of registration for conducting the business of non-banking financial institutions. So 1,800 companies, we have written notices to all the companies stating that you are found to be conducting the NBFC business after analyzing your balance sheet. Why you have not obtained the certificate of registration? That is what the notices we have sent to all the companies. Now we are receiving the reply stating that it is our own fund. We have not obtained we have not accessed any public fund. We have not taken any deposit in public. It is not so. Whether you notwithstanding the source of your fund, the fact that you have made investments into the shares and debentures or you have lent loans and advances is a public NBFC activity. In which case you should have taken the license from the Reserve Bank of India. So now we are analyzing the replies received in response to our notices, and we are likely to advise in case the companies are systemically important, in case there is a genuine need for the company's existence, then we may advise such companies to approach for certificate of registration. In some other cases, we may advise the companies to decorporate, and in some cases, we may advise the companies to merge with the existing NBFCs, and in some cases, we may also tell them to unwind your financial assets and become a non-financial company. So these are likely scenarios where we may advise after analyzing the replies received from the companies.
So one more is whether this such type of companies can be converted to LLPs now, or for opting for converting the NCA will ask for the NOC from the
NOC will not be issued for LLPs. According to they should not conduct any MBS business because they will be unregulated space. Such unregulated companies, unregulated sectors will not remain in the financial space. They may affect or they may transmit the risk to the other formal segments or formal financial systems. The interconnectedness is there.
What does the
limited prudential norms? We have told the companies which do not have public fund, they need not follow what is called credit concentration norm on capital adequacy. That is called limited. All other things they will have to follow.
So in case the NBFC NBSI is less than 500 crores, so the issue is that the question what they ask that all other NBFCs non-deposit should comply with both the category compliances or not? Even if the
no, in our notification, in our circular, we have told that all the companies, non-deposit taking companies, less than 500 crore rupees, are to submit on an annual return. Till such time an annual return is prescribed, not prescribed, till such time it is prescribed, the existing system of reporting will continue. The existing system of reporting, that is, in case of less than non-deposit taking companies, non-systemically important, they will have to submit the annual auditor certificate. And in case of other companies, they will have to continue to submit the returns prescribed for the systemically important company. But once the format of the return comes, then we will at that time we will make it clear, and at that time we will clarify what has to be submitted by whom.
Thank you, Mr. Swami, for this. Now, next, some questions I am asking, which I will take it further.
questions which we have received, I think can take full day. Okay, good questions. There are some questions which we have received is more of a policy matters which I will refrain from answering. So why this and why that and why we should be governed and all that. I think that is not required, but we can discuss at a tea time. What are some questions which are of general importance that we will take up? One is on public funds. We are borrowing from another NBFCs. Should we consider as accepting public funds? Definition given prudential known as ICD. To my mind means yes, because whether we are borrowing from any ICD, it will be considered as a public fund. In the NBFC circular of 27 March, definition of systemically important NBFC is mentioned as companies with asset size of more than 500 crore, but no reference of group is mentioned. When I already discussed during my presentation that it is, I think the intent is to group. However, in the notification we have not found. In his notification is talking about one company, but November 10 guidelines is talking about multiple companies. So one will have to wait. But if you are having companies in a group which is more than 300 crores, 3 companies, then still it will be a SI and regulation of SI will be applicable. We are NBFC investment company, no customer. Do we have a fair practice code? And the fair practice code is now being changed to either corporate governance or conduct of business guidelines. So if you are not having any customer interface, KYC may not be applicable. And register with CIBIL, I think that we have to approach to RBI. I think RBI may be kind enough if you are not having any customer interface, only you are having only investment.
In case there is no customer interface, you need not become a member of any Trade Information Bureau also, CIA. And those companies who are having customer interface, who are lending granting loans and advances, they need to become members of all the CACs, that is Trade Information Companies. There are 4 Trade Information Companies, and we have also had a word with the CACs. They will be charging only 10,000 rupees first time membership for all the. Then 5,000 rupees, I think, annual membership. They have given some concession to these companies. All have to become members of all the 4 Trade Information Companies, so that you will get to know the borrower profile from all the companies. Otherwise, if you become a CIBIL, if the borrower is borrower has defaulted, he has got a default credit history, and which is known to the other credit information companies, you may end up having a risky asset. So you will not have a complete due diligence on the borrower. You can conduct due diligence on the borrower only when you have the credit profile of the prospective borrower, which may be available in the other credit information companies. So that way you need to become member of all the 4 credit information companies, and you need to refer to all the 4 credit information companies to find out the credit history of the prospective borrower.
In case of NBFC NDSI, there is many other subsidiaries. Are these subsidiaries deemed NBFC ND? Then every company has to see on a standalone basis about their balance sheet size and the asset income pattern. Only thing, when you are talking about SI, if it is an NBFC, the 50-50% guideline continues, then you have to club going forward for SI or non-SI. NBFC ND lending to another NBFC, is there any problem? I don't think so. NBFC, if you are lending to a group company or if you are giving shares in other NBFC, then there is a consequence because it will be minus from your own funds, otherwise no problem. What is the meaning of customer interface for KYC? Customer interface, if you are in loaning business, then this customer interface of KYC and FPC will be applicable. Can NBFC carry 2 businesses, investment in digital and advancing loan? Answer is yes. If group 1 securities are regrouped, if a personal loan is given by security of pledging of shares, will the circular be accredited? In earlier, before this clarification, answer was yes. But now, if any personal loan is given, okay, again unlisted shares, then it will be not be applicable. The next is whether company carrying on any derivative trades in security markets or commodity market required to obtain registration. how test of NBFC criteria company for losses in non-NBFC business and profit in NBFC company. I'll answer this is important. Now, so when derivative business is being asked time and again, then whether if I am doing only derivatives and I am not, because if you see the section 45 IC of Reserve Bank of India, it says acquisition of shares, securities or other marketable securities. So to my view, if you are doing only pure derivatives, because when this act was drafted, derivative was not in place only. If you see the definition of derivative under 2H of security contracts, it talks about security word includes derivatives. So by and large, if you get strict speaking, derivatives is a security. But if you read the 45 IC, it talks about shares and marketable securities. So to, I think one will have to approach RBI and ask for the dispensation that since I am doing only derivatives, I am not in any saving business, and I should be, this should not be, I should,
So do you like to verify this on derivatives?
Derivatives and that is meant basically for hedging purpose.
You're trading.
No, the derivatives what we have stated is for hedging is there. Actually, where exactly you have come up with the option trading or trading? Futures and options. Yes, futures and options, the companies are undertaking the business. They are undertaking the business. They can be considered as a financial asset only.
It's not marketable.
Pardon?
It is not marketable.
It may not be marketable, but it is a financial contract. Yeah.
Then all financial contracts will come into play of interest, futures, options, and futures.
Actually, the interest futures and options, the interest futures and currency futures, we are told it is for hedging purpose.
Now I can do
No,
trade business.
no, we have told that for such interest futures and currency futures, we are told it for hedging purpose.
I can do it without hedging also.
No, sir, speculative cannot do.
Currency futures and futures.
Speculative cannot do. NBFC should not do. NBFC is having restriction from Reserve Bank of India, cannot do.
then one will have to arrive because, and sir, I would request that even at our end also, if we can examine this. Because now, how to find out it is really for hedging or trading? Okay, there are lots of questions will come up, but I think we'll have to study more and find out really. The last question which I would like to take, there are other questions we can take offline. Audit committee of SI as per new regulation is mandatory. Does it require to constitute independent director as required under section 177 of Companies Act? Even there is no public deposit and public funds taken. And for all SI, okay, as per new corporate governance, it is necessary. Whether you are taking public deposit or not, that is not required. So that audit committee is necessary. There are other questions which are not of little very specific. If your question, we are here for another 15 minutes, so offline we can ask, otherwise.
So looking at the question, we find that the number of questions as Bhavesh Bhai told is more than the participants. We just request you from this forum that can you issue the FAQs so that many of these questions can be, because we find such FAQs are there under the foreign exchange and all those things. Similarly, NBFC regime is also there that will help so all of the many of them with. At least they will have a clarity of the thoughts that what the things expected from them and what RBI's thought process of the RBI is there.
A good suggestion, definitely will consider. Take up with the law.
If you want, we can also present our memorandum also on the representation and give it to you. Thank you, Bhavesh Bhai and Mr. Swami for taking the basic regulatory framework and giving solutions to the many of the questions which are there in the mind of many of people, because the NBFC is such a regime that very less material available in the public, and to have the person like Mr. Swami to answer those is a very rare occasion. I thank you for this, and I request Kriti Saula to offer a very good vote of thanks.
Dignitaries on the dais, off the dais, seniors and my dear friends.